Hey guys, good afternoon from here. So I'm gonna show you guys a trade I took on audchf. So this is the analysis I did right here, audchf, and you can see the before chart on that. So screenshot was taken on 24th of October, yeah, 2022 by 10:03 a.m. Nigerian time, GMT. So this was the analysis, and you can see we are marked out. So I'm gonna show you something interesting I saw right here that made me understand that the market is to go bullish. So first of all, like I always say, you have to study about the algorithm, know where the algorithm is reaching for. It's kind of like an ICT concept where you could know the algorithm. It is not the pressure of you buying and selling. It's not the buying pressure or selling pressure. It's just what the algorithm decides to reach to. And what is it reaching at? Liquidity, sell side imbalance, buy side imbalance, and the area of demand and supply of the blocks. So right here on the 4 hour, this is it right here. But you can see there's no you can't even see anything. So most of you guys know I'm always on the lower time frame. So yeah, I ran down to the 1 hour. And then what I'm looking for a trade to continue this, an entry for where I could continue this trade. So right here, I saw a QMTR. But forget about the QMTR. Right here, we have a significant support and resistance. You can see the market has been bullish for a while. Then we have a break of structure. So this is expected to be a QML and this area of supply. But what happens? It was used as a what? Significant support resistance. We have resistance, support, resistance, and stuff like that. So yeah, so a area of demand supply or the block, a build up is tends to be around that area below support or above resistance in an area of where we have liquidity. So also, like I always said, if you spot an entry, what are the things you need to do? You need to do what? Liquidity assessment. So what am I liquidity assessment? Liquidity assessment is that I have an area of sell side liquidity resting below here. So the algorithms tend to grab that liquidity, and as a smart money trader, you are trading the stop hunt. Yeah, you're trading the stop hunt. So what happens? Price trade lower, did what? Grab that liquidity, but then created another area of what? Support. So what are we doing right here? Now, this is the interesting part. After I support my entry, we can see we have a fair value gap right here. These two candles. So price went bullish from here. Normally, if the next candle is to appear, it should just start from here, go up. You understand? But it did not start from where the candle closed. It did what? It created a gap. So it is in line with a smaller time frame right here. But then this is the QMTR, and we have some support resistance. So what do we do? We mark that area. That's where I have my entry. Right there, you can see I marked that area. So yeah, that is it. So what then is next? You have to wait for that area. Now, after your liquidity assessment, where are you supposed to place your TP? Like I say, your TP should be at your area of draw to liquidity. Your TP is a draw to liquidity. And what is that draw to liquidity? We have double top equals resistance support, where we have equal highs and equal lows. So for the buying, you could be looking for equal highs, but since there's no equal highs, another draw to liquidity is where you have imbalance. So right here, we have an imbalance. That is where you're supposed to place your TP. All right? Place your TP, even though you know the price could go out, could still rally up. But the reason why you place your TP here is that in every gap, wherever there's an imbalance, fair value gap, price tends to do what? React at the area, and it could possibly reject at that area. So you should leave at that area after the price is rebalanced. So yeah. So we saw that on 1 hour, and you know the fair value gap right there. Then 30 minutes. 30 minutes, you can see that area of what? Demand. You can see that area of demand, the gap also in line with the area of demand. And where the price tapped to, price went straight to that area of the fair value gap. Here I run down to the 1 hour again, and then move this to the fair value gap right here. You can see price tapped to that area of fair value gap right there. So you can see the sniper entry. Price tapped the area afterwards, stop hunt, and ran to do what? Balance sell side. So it went to that area, balanced it, sell down a little, but then continue to go higher. So you know, guys know that I don't trade fair value gap. The reason is that this could happen. I use fair value gap as an area to place TP and not an area to enter a trade. All right, I have my reasons. because you could get to see fair value gaps everywhere, right? You see, like here we have a gap. So yeah, so that is a wonderful trade on chef. Yeah, it's a clean one. Yeah, it's a clean one.